Hello and welcome to the My First Studio podcast on the stabilization of ringgit. I'm your host, Abong Joe, and today we will explore some possible ways to understand the stabilization of ringgit based on the web search results. We will cover the following aspects: the floating exchange rate regime that provides Malaysia with the flexibility to adjust to international economic and financial developments. The managed float regime that allows Bank Negara Malaysia, BNM, to intervene in the foreign exchange market to smooth out excessive disruptions to the market. The monetary policy measures and selective capital controls that influence the interest rate and money supply, which in turn affect the exchange rate. The future outlook of the ringgit based on various scenarios and forecasts. Let's start with the floating exchange rate regime. The floating exchange rate regime is the system that Malaysia has adopted since 2005 after abandoning the fixed exchange rate regime that was imposed during the Asian financial crisis in 1998. Under the floating exchange rate regime, the value of the ringgit is determined by the market forces of demand and supply, which are influenced by various factors such as global economic and financial conditions, commodity prices, trade balance, public debt, political stability, market sentiment, and speculation. The floating exchange rate regime provides Malaysia with the flexibility to adjust to international economic and financial developments. It also accords exchange rate stability against its main trading partners. A fixed exchange rate does not eliminate volatility, but merely transfers that volatility to domestic prices such as asset prices and inflation. Therefore, a repegging of the ringgit has never been a consideration, as it would be very harmful to the Malaysian economy. Next, let's talk about the managed float regime. The managed float regime is the system that BNM operates under the floating exchange rate regime. Under the managed float regime, BNM lets the ringgit fluctuate within a certain range according to market conditions, but may intervene occasionally to smooth out excessive volatility and maintain orderly market conditions. BNM does not target a specific level or direction of the exchange rate, but rather allows it to adjust according to the underlying fundamentals of the economy. BNM intervenes in the foreign exchange market by buying or selling foreign reserves in the market. This affects the supply and demand of the ringgit and hence its value. BNM may intervene when there are excessive disruptions to the market, such as excessive fluctuations or speculative activities that could affect the normal functioning of the market and the economy. BNM also monitors and responds to the changes in global economic and financial conditions that affect the demand and supply of the ringgit. Moving on, let's discuss the monetary policy measures and selective capital controls. The monetary policy measures and selective capital controls are the tools that BNM uses to influence the interest rate and money supply, which in turn affect the exchange rate. BNM implements various monetary policy measures such as the overnight policy rate, OPR, is the interest rate at which banks lend to each other overnight. The Bank Negara Malaysia, BNM, may raise or lower the OPR to influence the cost and availability of credit in the economy. A higher OPR may attract more capital inflows and appreciate the ringgit, while a lower OPR may have the opposite effect. The statutory reserve requirement, SRR, is the percentage of deposits that banks must keep with BNM as reserves. BNM may raise or lower the SRR to influence the liquidity and stability of the banking system. A higher SRR may reduce money supply and appreciate the ringgit, while a lower SRR may have the opposite effect. Open market operations, OMO, refer to transactions where BNM buys or sells government securities or other instruments in the market. BNM may use OMO to inject or withdraw liquidity from the banking system. An injection of liquidity may increase money supply and depreciate the ringgit, while a withdrawal of liquidity may have the opposite effect. Foreign exchange swaps are transactions where BNM exchanges ringgit for foreign currency with an agreement to reverse it at a later date. BNM may use foreign exchange swaps to manage its foreign reserves and influence short-term interest rates. A swap that increases foreign reserves may reduce money supply and appreciate the ringgit, while a swap that decreases foreign reserves may have the opposite effect. BNM also implements selective capital controls to limit the impact of external developments on the domestic economy and the exchange rate. For example, in 2016, BNM introduced measures to encourage exporters to convert more of their foreign exchange earnings into ringgit and to promote domestic trade settlement in ringgit. This was done to increase the demand and supply of ringgit in the market. Finally, let's examine the future outlook of the ringgit based on various scenarios and forecasts. The future outlook of the ringgit is uncertain and depends on factors such as global economic and financial conditions, domestic economic and political situation, the monetary policy stance of the U.S. Federal Reserve and BNM, as well as market sentiment and expectations. Based on web search results, here are some possible scenarios and forecasts for the ringgit-dollar exchange rate. According to 30rates.com, http://30rates.com, the ringgit is expected to depreciate slightly against the dollar in the next few weeks, reaching 4.791 by November 20, 2023. The website uses a statistical model based on historical data to generate its forecasts. According to the Star, the ringgit extended its fall against the dollar on Monday, October 23, 2023, as the 10-year U.S. Treasury yield hit 5% and the geopolitical tension in the Middle East escalated. The ringgit closed at 4.7900/79.75 against the dollar, a 0.49% decline from Friday's close of 4.7655/7700. The article quoted Bank Negara Malaysia BHD chief economist Mohammed Afzainazam Abdul Rashid as saying that the markets are still wary about the possible ground offensive by Israeli forces and the unwavering support from developed countries for Israel, which could result in further escalation in the region. He also said that foreign exchange markets will continue to remain risk-averse, which would result in higher demand for the dollar. According to useforcast.com, http://useforcast.com, the ringgit is expected to appreciate slightly against the dollar in 2024, reaching 4.6470 by January 2024. The website uses a machine learning algorithm based on historical data and current trends to generate its forecasts. According to another article by the Star, the ringgit is likely to bounce back next year from the current range of 4.65 to 4.75 against the dollar, aided by the still solid economic fundamentals and expectations of a less aggressive monetary tightening in the U.S. The article cited RHB Research as saying that trend-wise, it is predicting the ringgit to improve in 2023, while not ruling out that it may hit 5.00 against the dollar in the medium term. According to TradingView.com, http://tradingview.com, the ringgit is currently in a downtrend against the dollar, as indicated by the lower highs and lower lows on the daily chart. The website provides technical analysis tools and indicators for traders to analyze and forecast the price movements of various financial instruments. That's all for today's podcast on the stabilization of ringgit. I hope you have enjoyed listening and learned something new. If you have any questions or feedback, please feel free to contact me at abangjo+wanster@gmail.com.